If your top concern around the American economy is fiscal sustainability, if you're worried about the debt or the deficit, you are in for a rude awakening next year, because Donald Trump and congressional Republicans are already hard at work in the tax writing committees working on a budget-busting tax package of additional cuts, tax cuts for the wealthy, and possibly even more for corporations. As Yellen said, we know because the Congressional Budget Office has already weighed in, just extending the status quo, the tax cuts that Trump passed in 2017 that are slated to sunset and expire at the end of next year, merely extending those for the next 10 years is going to cost nearly $5 trillion. So we are definitely not headed to a better place from a fiscal sustainability perspective. But this isn't really that surprising. When we get a Republican trifecta, we get tax cuts and we get budget deficits. That's what happened when President Trump, took office in 2017. That's what we saw with Bush and the Bush tax cuts. So I think we've seen this movie before. We know what to expect next year. We absolutely should be in a position to let those tax cuts expire on schedule if our focus is budget deficits. I mean, there are also other good reasons to let those tax cuts expire, including it would decrease income inequality in this country. But that's obviously not where we're headed, if congressional Republicans are able to move through their planned tax cuts.
Well, of course, we've talked about this idea of the tax cuts combined with the tariffs becoming something even greater. Scott Besson has talked to us about it here at the table, suggesting you cannot take one element of the plan in a vacuum. You have to put it all together. They also point, Lindsay, as you well know, to rising revenues following the Trump tax cuts when they were first implemented in 2017, suggesting that COVID got in the way, that the pandemic distorted what came next. How do you respond to that?
Yeah, I mean, there were a lot of promises made in 2017 about the long-term outlook of the tax cuts. One of the promises made was that the tax cuts would pay for themselves. Obviously, that was not borne out. We know that the tax cuts cost $1.9 trillion when all was said and done. There was a period of time when the Trump administration was also promising that every family would see a $4,000 increase in their wages because of the tax cuts. That also didn't come true. So I'm not holding my breath for more kind of mythical supply side economics, results from tax cuts. The data's in on this. We have legions of academic research that shows that these tax cuts won't pay for themselves. What they will do is boost the bottom lines for shareholders who will see big benefits.
Well, there's also the question of the impact both the tax and tariff side of the equation that Joe was referencing will have on inflation when the Fed is trying to get closer to declaring outright victory on that. Lindsay, we, of course, got CPI this morning for the fourth month in a row, a 0.3% rise in core CPI, Xing out food and energy. Is this all the justification necessary for a Fed cut next week for now? And then what happens once we get into 2025?
Yeah, I think CPI came in today sort of right on schedule, right in line with expectations. And as a result, I do anticipate the Fed will move forward with their planned cut next week. Headed into next year is a really interesting question. I do think if what we see in terms of economic policy in Washington is tax cuts for the wealthy and higher prices for everyone else, the inflation outlook will deteriorate considerably. So that's obviously something that we're concerned about and watching closely. But as it stands right now, inflation is still off of its peak. We're in a reasonably good place inflation-wise, and I think the Fed is in a reasonably good place as well.
Interesting statement from Lael Brainerd coming out of the White House. For 4 months in a row now, she writes, inflation has been close to the level right before the pandemic. It's almost like an almost mission accomplished sign. They almost made it, Lindsay. How would you describe the job done here? I know we get one more data point before they leave office, but the job done in beating inflation.
Yeah, look, I mean, I think the Biden administration has a lot to be pretty proud of. They came in during an incredibly tumultuous economic period and a tumultuous period for the country more broadly, right? We were in the throes of a devastating once-in-a-century pandemic. The unemployment rate had had come up above 6%. And then, shortly thereafter, we started to see the surge in inflation in late 2021. And, they leave office more or less having taken care of all of those issues, right? The pandemic has subsided. Unemployment is back down to pre-pandemic levels. Job growth is nice. Wages are beating prices. Household incomes are looking nice. And inflation is inched down to close to that pre-pandemic level and very near the Fed's 2% target. So they have a lot to be proud of. Obviously, the sort of electoral benefits of that work, are sort of vexing and frustrating to them. But I think, just on the numbers, calling balls and strikes here, they've done a really nice job with the economy. And I think it is really a testament to their approach, which was to center increasing worker power, to center making federal investments in markets and the economy so that we could have those good paying jobs that have been powering that record job growth month over month. And then also, they've done a really exceptional job in curbing the worst excesses of corporate power. We saw just yesterday, the court agreed with the Federal Trade Commission to block the merger of Kroger and Albertsons. I mean, that's certainly something that would have resulted in a spike in grocery prices for families. Obviously, we have, weathered that storm for now.